like to introduce Mark Mindick, a partner at Citrin Cooperman, to discuss crowd-based funding.
Thanks, Dan. Hi, everyone. My name is Mark Mindick. I'm the real estate practice leader at Citrin Cooperman, a top 25 national accounting firm in the U.S. And we're here today to talk about crowdfunding. We hope to learn a lot about the basics and to get some real-life examples from some of the industry's most knowledgeable professionals. I'm pleased to have with me today Terry Adler, Managing Partner of Duval and Stachenfeld, and Ilya Gamer, Managing Director of CrowdStreet. I'm going to ask both Terry and Ilya to each give you a brief introduction of themselves and their company. Why don't we start with Terry? Terry.
Thanks, Mark. So Terry Adler, Managing Partner of Duval and Stachenfeld. We are a real estate boutique located in Midtown Manhattan, and we focus almost exclusively on the real estate industry anywhere in the capital stack all over the world. And one of the things that we've been doing a fair amount of, including with Ilya at CrowdStreet, is crowdfunding.
Thank you. Ilya.
Hi, Mark. Thank you so much for the intro. My name is Ilya Gamer, Managing Director at CrowdStreet. CrowdStreet is a marketplace where individual investors could invest into individual real estate deals or funds with best-in-class sponsors / operators.
Great. Thank you so much. Terry, let's start with you. Crowdfunding, as it relates to commercial real estate, is fairly new, or at least it feels that way to me. So can you give us a little background of how this all got started from a legal perspective and a compliance perspective?
Sure. So, investing in real estate is, I think, something that everyone in the world always wants to do. It is an asset class that, people really appreciate. But the sort of large-scale investment by people into institutional class investments has pretty much been precluded for those who are, high net worths or pension funds or things of that ilk. And so with the creation of crowdfunding and the regulations with the SEC, what that did is it really opened up the marketplace, the real estate marketplace in particular, other marketplaces. It really opened that up to the individual investor to participate in real estate transactions. And it also allowed sponsors and operators to raise capital in a different way. So instead of getting these big checks from institutions, they could get an aggregation of smaller checks from accredited investors to invest in real estate. So it's really, sort of opened up a door to investment that just wasn't available before.
Great. Ilya, CrowdStreet has been in this space since the beginning. From the perspective of the leading organization in the space, what has it been like? What are you seeing on both sides of the transaction, from the view of the investors and from the view of the sponsors?
Yeah. Also, I just want to say that was an incredible overview from Terry. That's why she is one of the best in the business, leading in the crowdfunding space. Great explanation. That is just great overview. So CrowdStreet as a firm, one of the first to get incorporated into the space. Everything launched essentially from the passage of the Jobs Act, which just allowed individual credit investors and general solicitation of private securities through 506C, which Terry could probably speak to on the webinar. And just seeing the growth has been, from my seat, incredible. Seeing the opportunity that individual investors now get, that it used to be you needed to know the right people and you needed to belong to the right social circles or the right country club. Now, due to and thanks to online platforms like CrowdStreet, like ourselves, they now get access to best-in-class operators, opportunities that were only reserved for a select few. And seeing the growth and adoption, which I could get into a little bit later, it's just been like a rocket ship, where effectively in the year 2017, we raised about 120 million online in that entire year. Currently, we are raising more than that per month. So we're on a pace to raise about 120 million each month. So projecting about over $1 billion of equity raised in 2021 and looking to double that probably in the following year.
Great. So talking about growth, and this next question is going to be both for Terry and Ilya. So Terry, why don't we start with you? The pandemic has been challenging for all, including people in commercial real estate. Definitely not an exception, albeit not as bad as other sectors, as some can argue that it has helped, especially in certain sectors. However, what did you experience in the past year and a half compared to the pre-pandemic times as it relates to crowdfunding? How has COVID affected the industry, and specifically as it relates to crowdfunding? Terry, why don't you take that?
Sure, that's a big topic. So, COVID has impacted the real estate industry in very interesting ways. It's impacted, obviously, for a time. There was nobody doing deals. No one could travel. You couldn't go to the real estate. There were some fundamentals that just couldn't happen. But one of the interesting things that did occur was that places like New York City, people were afraid to invest in. It wasn't clear what was going to happen. You had this dispersion of people who went to other locales, their hometowns, their parents' houses outside of the city. And those places became very electrified, right? They got very interesting. And so there's been a lot of swing of investment into other areas, other locations, other sectors, industrial, cold storage, single family rentals, all kinds of things. And what crowdfunding has enabled is also, while many institutions were on the sidelines because they were waiting to see the impact, what crowdfunding did, and we've worked a fair amount with CrowdStreet, and Ilya and his team are just great to work with. It opened up this portal for people to take advantage of a new source of capital. And as long as you were an accredited investor, these operators could come in and do deals that they maybe couldn't source capital from other sources during the middle of the pandemic. And it also, it provided a means for people to continue to do deals even as the anxiety over COVID was sort of gripping most of the community.
Great. Ilya, what are your thoughts on this?
Yeah, Terry really hit the nail on the head. For CrowdStreet, it was an opportunity for not only additional market share, working with best-in-class sponsors, it gave us an opportunity to also shine and show what the platform is capable of. And when other institutions, where they were looking at their portfolio, pencils down on new investments, the individual retail accredited investor, they still wanted to put out equity. They still wanted to participate in the markets. And many sponsors found that that is a meaningful. So we signed up some of the best new operators that we work with during the pandemic. We've seen our investor base grow something around 25% in the third quarter of 2020. Just incredible growth to see for 8-year-old plus company. And it was really a way for sponsors to shine for deals that worked. And it was an opportunity for investors to get into deals that would be reserved only for institutions, because now they're looking for us, the retail investor network, to raise money for, like Terry mentioned, industrial assets, big multifamily assets that were really out of reach. And we're raising now also meaningful checks. So they're looking to us to replace many institutions. And now that they see that it worked during COVID, effectively, I'm not sure if many of them will go back for every deal to institutions. I think they're going to continue to explore the path of online syndication. So, there was a silver lining to that period.
Great, thank you. Let's talk about some specific deals. As we know, the best way to learn about a process is by discussing specifics. So, Ilya, why don't you go through it, give us your favorite deal, and why don't you talk a little bit about the process? And as we know, and I know, working very closely with CrowdStreet, you have a meticulous process, you have great asset management, you have great underwriting. Why don't you take our viewers through this a little bit and discuss a specific deal?
Yeah, happy to. So I don't have favorites. I'll say that. It's like kids. They're all great, but there are a few that shine, if you will, or are very memorable, maybe because of the period of time that it occurred or the story behind it. One that I think I should mention that Terry and I worked on together was a charter school in New York City. So what's incredible about this deal is that not only was it a first-time sponsor who's never utilized online syndication platforms or online investing, it was also a chance for us to do social good. It was a school, so it was incredibly memorable. The returns for the investor were outstanding. It was in an area of Queens that was the epicenter of essentially the pandemic, hardest hit. So they got a chance to get in the deal that helps the community and also do well by doing good.
Great. Can you
I
talk
will
about?
say,
Yeah,
just,
sorry.
I will note, sorry, just that particular deal that Ilya is mentioning, not only was it the first time of the sponsor using an online platform like CrowdStreet, it was really their first time raising outside capital. So they had largely raised the money for their deals from friends and family, and were, reticent and a little nervous about going into basically this, jumping from, a small pool of friends and family into this unknown. And, CrowdStreet really did a very nice job of tutoring them, if you will. It's maybe not the right word, but really walking them through in concert with us, how this process would work, helped them with the capital raise, and I think they were subscribed like ridiculously quickly. So it was really a great exercise for them and a great intro into capital raising.
So as we know, no two deals are the same. But Ilya, can you let us know and compare how an institutional deal works versus a crowdfunding deal, and what the differences are in those deals from a financial perspective, and then also from a compliance perspective?
Perfect. So for the compliance, I'm going to let Terry speak to it as she's the expert on the panel. Of course, I know, thanks to Terry and other attorneys, of course, we're at this point incredibly well acquainted and experts in our own right. I would say the difference between institutional deals and ours, I don't want to say maybe our deals are slightly better, but they're at a point where they're fine-tuned, underwritten to succeed. A lot of the pre-development risk is already taken out. Mark, as you mentioned earlier, we have an underwriting team that goes through every single offering. We have an investment committee, chief investment officer, and they look at every single deal as if we're investing ourselves. Only 5% of offerings actually make it through. So to compare, where we play and where we excel is that deal between 25 million to call it 150 million. Really, the difference is just the profile of the investor is different. Also, the terms are negotiated in favor of the investor, and of course, the sponsor wants the deal to be successful. They want the raise to be successful. So really, the difference is that now they just don't have to write $10 million checks to get into the deal. They could get into a deal for as low as $25,000. So that probably is going to be the major difference, which isn't much, just a better deal.
Great.
Look, I would say there's, a traditional real estate deal before crowdfunding came into the world. You had many transactions that happened with a sponsor had a deal. They went out to a money partner, which was oftentimes a money manager or a high net worth or something that was writing them a big check. I'm not even going to talk about fundraising by those big hedge funds and things like that. That's a totally different ball of wax. And so, oftentimes you would have one partner or two partners, but they would be writing big checks. They'd be expecting control. They might be expecting, all kinds of different terms and negotiations. And what happens in the crowdfunding world is you have a lot more investors. To Ilya's point, you have people writing smaller checks. There's from a compliance standpoint, you still have to, file what's called a Reg D or do Blue Sky or whatever the necessary checks are in terms of those compliance issues. So that's largely the same, but you just have a lot more investors. So you'll be just, logistically producing more K1s, dealing with just more people. But from just generally speaking, you just have a bigger pool of people. You have to produce more, paper for those people, but it's smaller checks, and there's just less leverage in some respects because you have a dispersion of people investing in your deal.
So you just mentioned the buzzword, lots of K1s and reporting, and you're talking to a lot of accountants here. So I'm sure everyone is grimming and everyone is very happy. But I guess the next question, and I'll poise it towards Ilya, is from an international standpoint. Have you seen this pick up internationally outside of the U.S.? I know you're the leading company within the United States. And can you talk to us what you see going on across the world? And do you see any investors coming in internationally as well? And how do they look at this?
So currently, we are only working with U.S. entities, U.S. bank accounts, but there are some investors, of course, who are now at the stage where they have either dual citizenship or they're living overseas for tax. Well, can't speak to tax purposes, but for whatever reasons, they're living overseas. But we are seeing an uptick of inbound interest of investors who are reaching out, who are looking for ways to invest into U.S. real estate. And that's just such an easy entry point if one day, the laws or something along those lines get expanded. But absolutely, there is interest from overseas because the United States, of course, one of the best markets for commercial real estate.
It's a little tricky on foreign investors if you're raising capital because you don't want to have to comply with the advertising solicitation in other countries. So it's one thing with a foreign investor who's invest into the United States, but if you're like wanting to go to a foreign country and capital raise, you do have to, there are things you may need to comply with that, may not work.
So Terry, this question is for you. From your perspective, what is the future of crowdfunding and how substantial do you think this is going to be over the next few years and how is it going to grow?
Look, I have my crystal ball behind me, but I think at the end of the day, this is really changing capital raising. It's changing the market. I think that when this started, crowdfunding was all about, well, I need to raise $1 million or $2 million or $3 million, which obviously is a very small slice of deals. Now, as Ilya notes, we're getting much bigger checks. You're raising much bigger dollars, and that is really changing how the market is viewing crowdfunding. And I think that there's only room for growth. And the only real impediment or worry is if people start getting anxious about having 1,000, that's not the real number, but, just the aggregation of the number of investors to raise those bigger dollars. And so, Ilya, I don't know how much you're seeing, are you seeing people willing to come in through crowdfunding, writing those bigger checks for those bigger capital raises versus, 20,000 people giving, $25,000?
Yeah. So Terry said something very interesting and we are experiencing that and we are seeing that and we are seeing bigger checks being written by you would call them more substantial investors where now they're in the 7 figures where even though our minimum is 25K, they're writing checks significantly more than that. Terry, also, if you ever want to go on a meeting with me for an initial sponsor meeting, the invitation is there. It's a great overview.
I'm always available.
Good.
Great. Thank you so much, everybody. Thank you, Terry. Thank you, Ilya. This was very informative, and I really appreciate you joining us today.
Thank you for hosting, Mark.
Thank you very much.
Thanks, Ilya.
Thanks, Terry. Thanks, Mark.